Hello, I'm Max Dilendorf, a New York attorney and a real estate advisor. In today's video, I want to address a question that I often receive from international clients. What are the U.S. tax consequences if a non-resident wants to gift property located in New York to a non-resident relative? Let's walk through a common scenario. It's 2025, you are a non-U.S. resident who purchased a condo in New York City several years ago, and the property is now worth $5 million. You want to transfer the property as a gift to your son or sister who also reside outside of the U.S. So while this may seem like a simple act of generosity, the U.S. tax implications can be both significant and costly if not properly planned. Under the U.S. tax law, non-residents are subject to gift tax on transfers of U.S. situs property. That includes real estate located in the United States. Unfortunately, non-residents are not entitled to the same lifetime gift tax exemption that U.S. citizens and residents enjoy, which is approximately $14 million in 2025. Instead, non-residents are limited to an annual exclusion of just $19,000 per recipient. That means that the entire $4,981,000 value of the gifted property becomes taxable. The U.S. federal gift tax is progressive and reaches as high as 40%. So specifically for a gift of this size, you would owe approximately $345,000 on the first $1 million of taxable value and 40% on the remaining $3.9 million, which comes out to almost $1.6 million. So altogether, the federal gift tax liability would be approximately $1.9 million. As for the state-level taxes, New York does not impose a gift tax. However, it's important to know that if you pass away within 3 years of making the gift, New York's estate tax rules may pull the gift back into your taxable estate for state purposes. How can non-resident mitigate this exposure? So one commonly used strategy involves holding the U.S. property through a foreign foundation structure or a trust structure. For example, the gift of foreign shares, that is transferring ownership into a foreign entity, is not considered a U.S. situs asset and therefore not subject to U.S. gift tax. However, the structure must be properly designed, administered independently, and in full compliance with both U.S. and international reporting requirements. If you are a non-resident currently holding U.S. property or considering making a gift, it's essential to consult with advisors who understand the interplay between U.S. tax law, estate planning, and international structure. Thank you for watching. If you found this video helpful, please subscribe to the channel for more legal insights and planning strategies tailored to international investors. And as always, feel free to reach out if you would like to discuss a structure that fits your specific situation. I will see you in the next episode.